Welcome back to our first Principles of Accounts session. Today, we will be focusing on section 1 of the Principles of Accounts syllabus. Our topic for today is Introduction to Principles of Accounts, and in essence, we'll also look at accounting as a profession. Let us begin with our objectives for this lesson. As you can see, our first objective is to explain and differentiate the concepts of accounting and bookkeeping. Our second objective is to state the purposes of accounting. Thirdly, we would like to identify the external and internal users of accounting information. Our fourth objective is to list some careers in the accounting field. And our fifth objective and last is to outline professional ethics in accounting and factors affecting ethics. Let us first start off by giving a definition of accounting. Here you see that we're going to differentiate between accounting and bookkeeping. This is because a lot of times students they have a hard time trying to differentiate these two words, but they are very different. Accounting is a process of keeping financial records along with measuring, interpreting, and analyzing of the results, while bookkeeping is the systematic recording of the daily transactions of a business in terms of money, right? So we see that bookkeeping is actually the first step of the accounting process. Now, if you don't know about the accounting process, then you can check out our next video that we will have after this lesson. However, bookkeeping is done for transactions on a day to day basis, while accounting involves taking records kept during the bookkeeping process and sorting these transactions into meaningful forms to allow decision making. Right? So, in the bookkeeping process, records are kept, and that includes records of sales, purchases, expenses, and all other business transactions, right? But during the accounting process now, the information that was compiled in the different books, right, are used to form financial statements, and these include like um, the profit and loss um, accounts and the balance sheet, right? So that they can be prepared, analyzed, and interpreted. From these financial statements, you can get what is the profit, what is the gross profit, what is the net profit, if there is any loss, all of that can be analyzed during the accounting process, but this cannot be done in the bookkeeping process. And so you can understand now what is the difference between bookkeeping and accounting. Our next objective was to state the purposes of accounting, right? So we said that accounting, the main purpose, one of the main purposes of accounting is to calculate profit and loss. And this can be done when you have the trading and profit and loss account or the balance sheet. You can also determine the value of assets and liabilities. We know that assets are all the things that a business own, liabilities are all of the things that the business owes to other people or that would put them that the business would owe to other people. Another purpose is to provide financial records and information of the business. And the fourth purpose of accounting is to know if the business is worth investing in, right? So investors use accounting information to decide whether a business is worth investing in because they don't want to invest into a business and then they lose their money, right? Right. So now we're going to look at some of the users of accounting information. So earlier on, we said that we're going to look at internal and external users. So that means that not only the people who work in the business use accounting information. Accounting information are used both by people who work in the business and people who are outside of the business, right? Some internal users of accounting information are the management, the employees, the owners, and also anybody who exists in the business would use that information. Management use the information to analyze the organization's performance, right? And position, and to take the appropriate measures to improve the company's situation, right? So the management, they need to ensure that their business is successing, that they're making a profit, that they're turning over money, right? And they don't want to know that they're going into debt. So when they do their accounting statements, their financial statements, they try to improve their condition that they have, or they try to continue to a path that they are on. Employees assess the company's profitability and its consequence on their job security or future remuneration, right? So we when we say remuneration, we're talking about the total amount paid to an employee. So an employee wants to know that he or she is working for a business that is making a profit and they're not about to go into debt. Because if you're going to go into debt, then there is a possibility that they will lose their job. So why should I stay at this work if maybe 2 months or so after this I won't have a job or so? So you have to think about those things. Owners, right? So owners use accounting information to analyze the viability and profitability of their investments and to determine their future course of action, right? And when we talk about viability, is the business able to survive, right? Is it that they are making as much returns so that they can meet the commitments that they would have made to creditors, and creditors are people or organizations that lend your business or the business that you're talking about money, right? Right. So now we're going to be looking at the external users of accounting information. And here we have three external users of accounting information. We have the creditors, the tax authorities, and the investors. We have more, but for now, we're going to be looking at these three. I'm going to discuss the other two also, right? Creditors. So, creditors use accounting information to determine the business's credit worthiness, right? So, creditors include like suppliers as well as lenders of finance, such as banks. When you go to a bank as a business, they will look at your past loans that you would have borrowed, and were you able to pay back the money? Did the agency that lent you the money, did they have to come to you often? Did they have to wait on the money? Those things will determine whether you are credit worthy, right? And also your accounting information to know if you're making an amount so that you can pay back the loan, right? Because the bank doesn't want to lend you money and know that they can't get back the money, right? Tax authorities. Tax authorities use accounting information to determine the credibility of the tax returns filed on behalf of the company, right? Investors, they use accounting information to analyze the feasibility of investing in a company, right? So investors want to make sure that they can earn a reasonable return on their investments before they can commit any financial resources to the company. Would you like to know that you invest some money in a company? For example, say you invest money in Pepsi, right? And Pepsi, all of a sudden, Pepsi start make profit. So your money that you invest in not getting any profit on it, right? Would you like to know that? No, you wouldn't like to know it. You want to know that when you invest money in Pepsi, Pepsi is giving you a 2%, a 3%, a 5% return every month, right? So that is why investors will look at accounting information to ensure that they are going to make a profit in your company and your company is worth investing in, right? Now we're going to be looking at customers. Customers also use accounting information to assess the financial position of its suppliers, right? Which is necessary for them to maintain a stable resource of supply in a long term. So remember that you have very large companies, right? So, for example, I have a company and the company is selling oil, right? And I am Petcom, right? Petcom wants to know that the company that is selling him or her oil, right, has as much is making profits so that they can continue to supply me with oil. Because if they can't supply me with oil, how am I going to supply the other my customers with oil, right? So that's why people your customers will look at your accounting information, right? Regulatory authorities will also look at accounting information to ensure that the company's disclosure of accounting information is in accordance with the rules and regulations set in order to protect the interests of stakeholders who rely on such information in forming their decisions, right? So there are some information that you cannot disclose um, for stakeholders' protection and privacy, simply put. Right? So now we're going to move on to our next objective. And our next objective was to look at some careers in accounting, right? So um, t- there are some jobs that require little to no qualification, and when you start the career, then you will get some on the job training, right? And here are some accounts. Yeah, first clerk. You have two, bookkeeper, three, auditing clerk, four, bank clerk, five, payroll clerk, and six, management trainee. You also have careers in accounting, and these require a degree or some sort of qualification that can be attained either at AAT, which is Association of Accounting Technician, ACCA, which is Association of Chartered and Certified Accountants, the Institute of Management, or Chartered Institute of Public Finance, right? And these jobs include auditor, company or public accountant, tax professional, consultant, finance advisor, forensic accountant, right? Our next objective is to look at some ethics in accounting. Some ethics in accounting. And what are ethics? Ethics are the morals governing behavior, right? So you have professional ethics, and these displays the code of behavior that is considered to be correct or acceptable to a profession, right? So now we're going to be looking at some factors affecting ethics. These include culture, law, consequences, and code of ethics. So, what do we mean by culture affect ethics? Ethics differ across countries. What is morally or legally acceptable differs in country, because in Jamaica something can be accepted, but in India something may not be accepted, right? That is simple. You have law. A company's ethics will be based on the laws of the land, right? Illegal behavior is unethical even when the law differs between countries, right? Consequences. Individuals react to ethical or unethical behavior based on consequences. And in code of ethics, this is when there's a code of ethics. Behaviors are judged based on the code, right? So some businesses have code of ethics, things that you cannot do, and you just have to follow them. And it is right that you follow them. All right, so next we're going to be looking at the five fundamental principles of accounting. The first one is integrity. A professional accountant should be straightforward, they should be honest in all their professional and business relationships, right? Objectivity. A professional accountant should not allow bias, conflict, or interest to change how they act with others, right? Or to influence others. Professional competence. All right, so a professional accountant has a continuing duty to maintain professional knowledge and skill at the level required to ensure that a client or employer receives competent professional services based on current developments in practice or legislation and techniques. So, a professional accountant should act diligently and in accordance with applicable technical and professional standards when providing professional services, right? Confidentiality. So, confidentiality, a professional accountant should respect the in confidentiality of information, right? And this is acquired as a result of professional and business relationships and should not disclose any such information to third parties without proper and specific authority unless there is a legal or professional right or duty to disclose such information, right? Confidential information that is acquired as a result of professional and business relationships should not be used for the personal advantage of the professional accountant or any third party. And that is very important. You can always get in trouble when you're working and you don't keep the information that you get confidential. You have to keep information confidential. I think our next one would have been professional behavior because I would have skipped over it. And basically, when we say professional behavior, a professional accountant should comply with the relevant laws and regulations and should avoid any action that discredits the profession. All right, so for the introduction of accounting, um, this topic would have focused on what is accounting, what is bookkeeping, careers in accounting, ethics in accounting. So basically, this topic, our first topic, would have focused on accounting as a profession to prepare individuals for accounting. I hope you enjoyed this lesson. Thank you for listening, and I hope you join me on our next topic, which will be focusing on accounting cycle, and we will be finally getting into what is accounting, the fun part of accounting, assets, liabilities, etc. Thank you. Bye.